Hello students, how are you today? Hope you are fine and good. Now we continue Chapter 3, Accounting Cycle, Week 6. Are you ready? Let's go. Learning Objectives 3.3 Journalizing Process. A. Explain the uses of special journals and general journals. B. Explain special journals and its designated purposes. Now, take a look. Journalize the transactions. It is step 2 in accounting cycle. Students, what is journal? The journal. A. Is a book of original entry. B. Transactions should be recorded in chronological order. C. Contributions to the recording process to 1. Discloses the complete effects of a transaction. 2. Provides a chronological record of transactions. 3. Helps to prevent or locate errors because the debit and credit amounts can be easily compared. Students, do you know what is journalizing? Entering transaction data in the journal is known as journalizing. Companies make separate journal entries for each transaction. A complete entry consists of the date of transaction, the accounts and amounts to be debited and credited, a brief explanation of the transaction. There are two types of journal: special journal and general journal. First, I explain about special journal. It is used to record and post transaction of similar types. The types of transactions that occur frequently in a company. It is used for bookkeepers and accountants to keep track of different business activities. Companies use special journals to record similar types of transactions. There are 4 types of special journals. 1. Sales journal. 2. Purchases journal. 3. Cash receipts journal. 4. Cash payments journal. Sales journal. In the sales journal, companies record sales of merchandise on account. Cashed sales of merchandise go in cash receipts journal. Credit sales of assets other than merchandise go in the general journal. In the sales journal, the entry is debit to accounts receivable and credit to sales account. Take a look. Example format of sales journal. For the account to be debited, it will record all account receivable with invoice number and terms. In the purchases journal, companies record purchases of merchandise on account or credit. All cash purchases are recorded in another special journal known as cash payment journal or cash disbursements journal. In the purchases journal, the entry is debit to purchases account and credit to accounts payable. Take a look. Example format of purchases journal. For the account to be credited, it will record all accounts payable with invoice number or credit terms. Cash receipts journal. It manages all cash inflows of a business organization. This journal is used to record all cash receipts into the business. The example receipts of cash are receipts from cash sales, received from accounts receivable and receipt from other sources. In the Cash Receipts Journal, companies record all receipts of cash. The most common types of cash receipts is cash sales of merchandise and collections of accounts receivable. The three-column used for Cash Receipts Journal. It includes debit column for bank, cash and sales discount. Credit column for accounts to be credited such as accounts receivable, sales revenue or other account. Take a look example format for Cash Receipts Journal. Cash Payments Journal. In a cash payments or cash disbursements journal, that uses to record all payments that entity made by of cash. The example cash payments in business are, payment to accounts payable, cash purchases of merchandise, supplies or assets, cash payments for operating expenses such as maintenance or utilities, cash payments to employees such as wages and salaries. In the Cash Payments Journal, companies record all payments of cash. The most common types of cash payments is cash purchases of merchandise and payments of accounts payable. The three-column used for Cash Payments Journal. It includes credit column for bank, cash and purchases discount. Debit column for accounts to be debited such as accounts payable, purchases or other account. Take a look example format for Cash Payments Journal. Purpose of special journals. Design as a simple way to record the most frequently occurring transaction. Save time journalizing and posting transaction. Next, what is General Journal? It is a book of original entries to record raw business transaction. It is also a daybook or journal which is used to record transaction. It is used to record transactions which have not recorded in special journals. General Journal is used to record items that cannot be recorded in a special journal, namely asset investment in business except cash, merchandise drawings, sales of fixed assets on credit, purchase of asset on credit, return on sales or return outwards, purchase return or return inwards, adjustment entries, closing entries. Students, here with a format of General Journal. A date column, enter the date of transaction. B column headed, account titles and explanation. 1. Enter the debit account title, that is the account to be debited and the amount of debit is recorded in the debit column. 2. Enter the credit account title, that is the account to be credited and the amount of credit is recorded in the credit column. 3. A brief explanation of the transaction and makes it easier to read. See the column titled Reference. Thank you, hope to see you in my next video. Bye.